today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be the Tuesday, the 23rd of September 2025. So as usual, before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into today's chart of the day on an intraday technical outlook from a broad-based cross-asset class that I find it very interesting, let's have a quick recap what has taken shape yesterday in terms of news flow and relevant economic data release that has a significant impact on the respective broad-based cross-asset price section. So let's start with the US stock market first over here. So the US stock market continues to bask in the bullish limelight over here. So all the four major US stock indices closed in the green as expected. So the market leader is still being the mega cap technology centric Nasdaq 100, which outperformed together with the Russell 2000. So the Nasdaq 100 outperformed by 0.55%, not far behind, just slightly below the Russell 2000, which is up by 0.6%, almost the same magnitude. So still bearing in mind, the Russell 2000 only last week, it managed to scale fresh all-time high, breaking above its prior record high that was being seen in 2023 over here. So it managed to break out a kind of a two-year range configuration on the backdrop of more highly anticipated Fed rate cuts into 2026. So that I have touched more, that I have already covered in much greater detail last week, so I will not go through that again. So the reason why the market was so bullish yesterday is actually due to a positive news flow centric all on AI productivity team play, because yesterday there was another announcement stating that more investment flow will flow into the market leader or OpenAI, and this actually is caused by another market leader, which is the company that builds data center and chips to run this AI productivity team play kind of model that everyone right now seems to be must to have. So NVIDIA has made an announcement stating that NVIDIA will actually invest 100 billion into OpenAI to build data centers. So that actually created a positive feedback loop back into the market. So still recall that last week was Oracle, this time was NVIDIA. So who knows down the line which particular mega cap technology stocks will pour more investment into OpenAI to strategically strike an alliance on this AI tech war or high-tech war between US and China, as both countries try to gain supremacy in this AI arena as we head into the next 5 years. So that actually created a positive feedback loop into the market. So if you look at the S&P 500 heat map over here, NVIDIA for sure is gained the most yesterday among the 7 mega cap stocks inside the S&P 500. NVIDIA is up by 3.9% over here. And within that, Oracle continued to gain as well, up 6.3%. Microsoft profit taking, negative 0.7%, followed by Amazon down by negative 1.7%, and Google, Alphabet down negative 0.9%, and Metal down negative 1.7%. But this particular 3 mega cap stocks, NVIDIA and Apple, up 4.3%. So what you see that Apple over here managed to strong off from that lackluster post iPhone 17 launch over here and managed to bask in a bullish lamplight as well. And Tesla continues to be bullish, up 1.9%. So net overall, it's still a bullish momentum movement in the short term for the major US stock indices that we covered yesterday in my full suite of my daily dose, where I covered all the intraday technical outlook. And what's interesting yesterday is that the dollar has starts to lose a bit of strength, managed to actually cap its prior 3-day of rally ex-post FOMC meeting over here. So the dollar yesterday was actually down against the euro, against the CAD, and almost against the sterling as well. But if you look at the 1-day rolling performance, okay, so this is the 1-day rolling performance. So the 1-day rolling performance, we see a dollar sell off yesterday, and right now during Asia session, the dollar now try to rebound slightly over here. So if you look at the dollar index, what's interesting on the dollar index, yesterday it got rejected exactly at the 20-day moving average. All right, so this was the prior 3-day of rally ex-post FOMC meeting, where it managed to go back up above 97.3 and close on Friday at 97.64. And what we will see right now, last Friday gains were wiped out by this bearish candlestick after that rejection of this 20-day moving average on the US dollar index. So what you're seeing on your screen right now, this is the dollar index. So let me go to the monthly chart and put back this dollar index over here so that you guys could have a better view of the chart of what I'm talking about. Okay, so this is the dollar index. Okay, so why I use the dollar index? Okay, because basically the dollar index can be used as a benchmark to gauge broad-based dollar strength and dollar weakness. All right, so it's a view it as a composite index, something like the S&P of the FX market. Okay, view it this way. So the dollar index yesterday got rejected at the 20-day moving average and closed back at 97. Okay, give it up. It closed at 97.3, exactly back at 97.3, which is the key support level. All right, in today's Asia session, it's managed to up 0.06%. And also yesterday, dollar index weakness will also be driven by something positive up from Eurozone, because yesterday we do have a Eurozone tier 1 data considered as a forward-looking data, which is the flash Eurozone consumer confidence data for the month of September. So this flash consumer confidence data for Eurozone managed to came in better than expected. So market is expecting negative 15.3, so it actually has a lower decline at negative 14.9. So if you look at the trend of the consumer confidence in Eurozone, if you look at it from a 10-year horizon, by looking at the longer term picture, so from a longer term picture, we start to see it to form a higher lower over here. So it seems to us that the decline that has taken shape from October all the way up to October last year to April this year has started to stop in terms of decline, and it appears that the decline is now losing steam by shaping this higher low that's being seen on the latest consumer confidence flash data for September in Eurozone. So that also created a positive feedback loop into the euro dollar. That means the euro rose, that causes the dollar index to decline yesterday, given the fact that if Eurozone confidence gets better, that means the rate of decline starts to slow down. It means there is lesser need for ECB to jumpstart another round of interest rate cut cycle. Still recall that in the previous ECB meeting, ECB President Lagarde has hinted that they has more or less done with their interest rate cut cycle that has kickstarted earlier part of this year. All right, so that created a bullish momentum into the euro dollar, leading to that dollar index to actually have that retreat off from the 20-day moving average. All right, over here. Okay, and because of this dollar retreat yesterday, gold price also rallied as well. So gold rallied up by 1.7% within our expectation. So it hit our resistance level at 3,750, and right now that it starts doing a minor pullback, which is in Asia session is down by negative 0.16%, which is pretty much in line with from a technical perspective, where we start to see the RSI has hit a grossly overbought level yesterday during the New York session, but it did shape a bearish divergence, and right now as we are speaking, it's just started to exit from the overbought level, which is back down below 70. So it means that right now potentially there could be a minor pullback in gold XAU/USD. So two support level to watch for today. The first support 3,714, followed by a tighten pivotal support level for today at 3,688, which was previously the upside trigger level, now turns into a pullback support. And this trigger level was formerly the candle high, the candle opening price, the candle opening price, you know, this long black Marubozu candlestick where Fed chair spoke during the press conference that caused that minor decline. So this is the former upside trigger level that has been taken up yesterday, and also now turns into a significant pullback support level that confluence with the lower limit of this ongoing minor ascending channel that is still in place since 22nd of August. So this will be my key support level to watch, a tighten one, 3,688, to gut any minor pullback for today, to maintain that ongoing minor bullish impulsive up move sequence for gold XAU/USD, with the next resistance coming in at 3,776. And also one more news flow I share with you guys more pertaining to oil price. So still recall that oil yesterday we were bearish. We do not see the whatever rebound that has taken shape from 5th of September low this year at 61.85 after the meet-up between US President Trump and Russia President Putin. Whatever rally is more like a counter trend rebound rally. So indeed, that counter trend rebound rally lose steam right below the 50-day moving average, and yesterday it reintegrate back below the 20-day moving average, now seeking to retest the all important minor range support of 61.85. So still maintain that bearish bias on the West Texas oil with a tightened short-term pivotal resistance right now exactly at the 20-day moving average at 63.85. Below 61.85 exposes 61.30 next in first step, which is the 2nd of June 2025 gap up support. So that's for West Texas oil. And the reason why oil prices push down lower, because of this news flow stating that Iraq, which is part of the OPEC plus member, started to increase exports. All right. So given the fact that global demand continues to remain weak, especially from demand related situation over here, that give me a minute. Sorry. Yeah. So given that there is this external demand factor coming out from US that continues to act as a cap on further oil prices, and also given the fact that supply glut continues to remain prevalent, that causes yesterday's sell-off in the WTI crude oil price. All right. So with that right now, let us now proceed with the chart of the day. So for today's chart of the day, I will showcase one of the major stock indices, which is the Nasdaq 100, that has been in the limelight in the last 3 days or so. So the Nasdaq 100 continues to trade within this minor ascending channel that has been in place since 2nd of September 2025 low, and it now continues to inch upward towards the upper limit of this minor ascending channel. So given that the RSI now is at the overbought level, but there is no bearish divergence yet over here, going to show a higher high on the RSI in line with a higher high in the price action of the raw price action of the Nasdaq 100. So yes, there may be a minor pullback taking shape in today's US session. So minor pullback support level to watch will be 24,654. 24,654. Maximum will be my Titan pivotal support for today at 24,535. So two support level, 24,654. Maximum will be my adjusted Titan short-term pivotal support at 24,535. So, and that also confluence with yesterday's minor swing low during the start of the European session. So as long as 24,535 short-term pivotal support holds in any form of any minor pullback, we will still maintain that bullish bias for the Nasdaq 100 to maintain its ongoing bullish impulsive upmove sequence towards the next intermediate resistance level at 24,890, followed by 25,010, 25,100, which is the upper limit of this ongoing minor ascending channel, and also a Fibo extension cluster level as well. Only a bearish breakdown below 24,535 will negate today's bullish bias view to seek out a more pronounced minor corrective decline sequence that may unfold to retest the next intermediate support level at 24,305. So this 20, pardon me, yeah, this is the 24,305 over here. Okay, let me put it in writing. Again, 24,005. All right. So this 24,305 is the former minor swing high of 17th of September. Now turns into a pullback support, and so confluence very closely to the lower limit of this ongoing minor ascending channel. Right, so that's for my chart of the day. So lastly, to wrap up today's daily dose of market insight, let's look at the economic calendar. What are the key data to look out for today? So today key data will be a slew of flash S&P Global Flash Manufacturing and Services PMI data release among the developed nation for the month of September. So at 3:30 a.m. 3:30 p.m. Pardon me, a bit of time distinct. At 3:30 p.m. today, Singapore time, Tuesday, you see the release of Germany Manufacturing and Services PMI data flash for the month of September, followed by the aggregated one, the Eurozone one, at 4 p.m. So market participants will be looking at will there be a continued recovery in the Eurozone manufacturing flash PMI data, because for the previous month it managed to hit into growth territory at 50.7 during that for the month of August, and this time around market participants has inched up higher to 50.9. So if you start to go at 51 to 52 level, that could actually add on to further euro strength and potentially further dollar weakness. And thereafter at 4:30 p.m. we have the UK one as well, and followed by at 9:45 p.m. we'll have the US one, which is the S&P Global US Manufacturing Flash PMI data and Services PMI. So for US, market participants will be more concerned about the services side of the story, given the fact that 3/4 of US economic growth is driven by services activity. So for the services PMI flash data for September, market participants are expecting a slight dip to 53.9 from 54.5 in the month of August. So if it continues to dip down lower, below expectation, let's say it came in at 52 or 51, that could actually increase the impetus or increase the urge for the US Federal Reserve to do more in terms of interest rate cut next year into 2026 over here. And most importantly, we have a slew of Federal Reserve officials speaking. Fed posted at 10 p.m. Singapore time. Then before the release of the S&P Global US Flash PMI data for the manufacturing and services, we have Fed Bowman at 9 p.m. But most importantly is their boss, Fed Chair Powell's speech. Okay, so Fed Chair Powell's speech, this is a public speech. So he will speak in some chamber of commerce. So he invited to speak. And the title of the speech is pertaining to economic outlook. So that will be at 12:30 a.m. Singapore time on Wednesday, 24th of September. So that could potentially influence global asset classes across the board. So market participants will be hearing his view, especially his view on the US labor market, in line with his view on the inflationary trend in the US. So will he be more dovish, what he sounded earlier at Jackson Hole, or will he start to tune to be more of a neutral stance? Until that, at this moment in time, we will not know. So his speech will actually be potentially influence the short-term volatility of the global asset classes over here. All right, and before the start of our daily dose tomorrow at 9:30 a.m. Wednesday, we have the release of a Tier 1 Australia data monthly CPI indicator, where market expecting inch up to 2.9% for the month of August from previous July print of 2.8%. So any number that is higher than 2.9%, let's say it's coming at 3% to 3.1%, that could shape increased volatility in the Aussie dollar, more on Aussie dollar shaping recovery move. All right, over here. So that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.